48.
I have 64.
Oh,
All right, good evening, guys. Ken at Tortoise Capital. This is small group coaching cohort number one, October 2nd, 2024. Yeah, I just want to reiterate as we're in the final quarter of the annual program and want to start. I'm going to recommend you head back to your initial goals and outcomes and kind of do a follow through on your contract with yourself and with the course and kind of refresh your refresh your goals and objectives for the remainder of the course. I would like everybody in the sound of my voice here to think about contributing a 30-minute presentation on your learning experience for this past year that summarizes your work in progress and your next steps that'll be your free tuition into the annual research weekend. If you're willing to do that, then you'll get that workshop for free because it actually pays forward the work that you've done and gets you on the record with yourself and with others for the work that you've been doing. So give that some thought. I'll give you some more details on that next week. Um, Otherwise, let's go ahead and get her started with our check-ins. Um, Everything's going well here in Kansas. Had three teams at practice last night, or tonight, I should say. So we had 20 little screaming maniacs with one parent to help me. And that was a good, refreshing day on the soccer field. Had good times with the kids. The older ones actually enjoyed that. That made them feel like assistant coaches. They were actually more disciplined than they usually are. So may have to do that more often. Um, let's see, I've got 4-star general interest in the stuff we're doing on systems thinking and AI and creativity with the storytelling. So that looks like it's really getting traction. And it's basically the things you guys are learning to do, the changing perspectives and plot twisting and being open to true storytelling as a true storyteller and as a true story listener turns out to activate our creativity muscle in our brains. And there's 4-star general interest in this. So it looks like that program has gotten irresistible momentum and will continue to go. That's everything I got here from Kansas. Why don't you guys go ahead and jump on it and let's go.
no, I can go. I can go. So you asked me to make this report. I truly did not have time to sit down and do that at this point, and I will do it for next session. There is an incredible amount of aha moments that happened in the last 3 weeks that completely changed my understanding of trading to the point that every time now I see everything is an opportunity. It's like whatever I do, I start thinking on statistics, on the distribution, on and yeah, I was definitely specified in every single trading book. I was trying to find the silver bullet without knowing. I was trying to code the exact turnings and the following the market, and I got lucky, I guess, and I found a system that actually worked. And but I couldn't get it to work anywhere else for the same reason. And suddenly I extracted a lot of that logic and started working in several stocks. Um, I had a confusion with hybrid swing, which, as I understood it, was taking the 30-minute signals and trading those, and and that really like put me behind. Although now I have a swing system that works in the 30 minutes, and that's pretty good. There is a very big issue with those is the gaps are very costly, gaps in against. I try to minimize that, but they're still out there. This week I found 9 stocks that work with the system. And since then, I've been compiling all the data to do the statistics of the combined system and see how it looks, making sure not all the losses are in the same day for all of them. See if I can find some diversification. And that's where I'm at. That's where I'm at. I don't have truly anything of value to show at this point. But that's where I'm at, and heads down, modifying that. The system that I have in place still's working. I continue collecting ours, and it's working. It's working really nice. So there's nothing from last meeting additional to. Oh yes, there is. This is another aha moment that I think is, for me, was very valuable, which is aggregating everything to daily, weekly, and monthly. So where are you? Trade data. I have so many Excel things open that it's actually complicated. Share docs, trades, here it is. Hybrid swing, trades, trade data. I'm going to share the screen. It completely changes my understanding of trading once I started looking at it like this. Share, where I always lose my share. Here it is. Trade data. So in my stats, up here is the traditional one. The system's still working at as a 40, 60, 45, 55. The average has not changed much, 23 and 26. There is some slippage that keeps on accumulating, but it's working nice. And so I did this. I aggregated daily, weekly, and monthly of the model and of the daily. And now you start to see a 50-50 system with a factor of with 2 to 1 and 1.8 trades per day and an average of 0.46, which is incredible. If you look at as a system, as a daily, I can only hope that as I spread this into several stocks, this average R is gonna get a little better. And then you look at it weekly, and it's a 75 system with a 3-to-1 and a factor of 9-to-1, 6 trades a week, and then monthly. But monthly, I still have very little data for that. But it looks amazing. You go into the distribution, starting to build. My average on the 2R, as shown in the stats, and very big trading days to the right. 3 losing weeks, just about 1R, and very good returns in a general basis. And the equity line on a weekly basis keeps on accumulating Rs. I'm already close to 20R, and mind-blowing. It was a change of paradigm. So thank you.
Very cool. You said you didn't have anything of value, or I beg to disagree.
Thank you.
Yeah, they when you can sit back a little bit and feel the horse that you're riding, or riding a bicycle, you have that, there's an internal adjustment mechanism that you learn to just trust. trust yourself riding the bike. There's something in that. And maybe that's what this is starting to reflect.
Hmm.
I would think that's what it is. But yeah, that shift in perspective, it allows you to have, think about the mindsets that you have. You have the novice that's in there trying to get conscious competence on the specific rule set. You sort of have his direct supervisor that's watching it and taking notes. And now you have adopted the manager's point of view, which is looking at that as just each system is one box, one room in the factory making R. And now you're monitoring different work centers, each of which has its own little configuration, has its rules posted on the door. And now you're able to stand back a little bit and look at the overall performance of that. That's the having multiple perspectives in your mind of what you're managing. There's the trader, there's the accountant, there's the coach, there's the insurance agent, there's the production expert. All of those things are in play. Um, so you got to find ways to blend them all and have a systematic way of doing your review so that you don't get caught up just doing, the next thing that happens to come to your attention. You got to have a systematic way of managing all that stuff. So that's why we want to have a production schedule, a schedule of daily, weekly, monthly meetings for you.
Hmm.
The perspectives that you're going to adopt systematically. Like you don't need to activate the monthly manager except once a month when you get the new data set. There's nothing for him to look at. That's going to be the one that you use to decide how to start allocating money in between production systems, right? Because you've got a risk manager, and he's going to listen to the briefing from each of your weekly managers. The weekly reports of your systems managers are going to come in and start competing for discretionary capital. So imagine you had 5 working systems, and you decided to have 12% of your capital on each one. Right, so that would represent 60% of your capital is always at work, evenly distributed among your production systems. And then you have 40% of your capital that you're going to start comparing the 30 trade cycle and deciding where things are coming into better production, and then putting your 40% capital on the ones that are running the best.
Hmm.
So you're never going below 12%. So my old buddy and mentor, Bob Gardner, used to have what he called his 5 by 20. He would have 20 stocks or ETFs, usually ETFs. And he could have 5% in each one, if it would be evenly all 100% of his money. So what he tried to do was go always have 3% in each one. And then that would leave him 40% of his capital to spread among the other 20 that were in the right part of their time cycle.
Hmm.
So he could go from 3 to as much as 6% exposure to that one, So he was always kind of moving 40% of his money among the maybe top 5 performers, something like that. He was essentially looking at each ETF, looking at each index as its own little trading rules. It was like each one was a system. The system, the EWW system. Okay, so that's Mexico. He would always have 3% in it. and then he might have up to another 3% because it was in the bullish and the slope of the 30 was positive and it was above the PSAR. He could put as much as an extra 3% and then just let that ride. And as long as, if he had his 20 symbols, if he had 4 groups of 5, he would try to figure out what was the composition, which ones were the A, B, C, and D, which was in the top of the bucket, which was in the above average. So green, white, yellow, red in terms of timing. And that seemed to be a nice way for him to adapt his mindset to the to markets, making continuous adjustments and just not, there might be days at a time when he wouldn't make any changes because everything was just continuing. So it was a conditions-based asset allocation model based on relative strength. And then his job was always to find, hey, what are the next 5 symbols that are going to come in and displace the 20 that he already had? So a good problem to have, so that he was always ready for something new. So I thought that was a pretty clever way to do things.
Yeah.
All right, George, what do you got?
Cool.
Let me share my screen. So I've been working on the kata challenge with Griff. I actually finished coding the SSC and CD type 1 and 2. The SSC and CD type 1 actually were not working on EWW. So I decided to start trading.
Oh, what time period?
3 minute.
For how many days of look back?
90.
Okay.
So I decided to just start trading all 3 on DIA. And surprisingly, the CD type 2 works very well on EWW. So I'm trading that. And I started live trading.
Help me understand, what is a CD type 2?
So type 2 is PSAR flip, entry after the PSAR flip. So first you have a move down,
Yeah,
then a retracement with a
yeah.
PSAR flip.
And then it's the second CD after the piece. Yeah. So it combines like a kata 2 and a CD.
Yeah, it's like a kata 2 with the
My
wave.
favorite, it's my favorite pattern.
Yeah. So the problem is the expectancy is very good. Problem is that it only gets 2 trades per day. So I don't know if I should just look for other targets or if I should.
Is that in EWW
This is in both EWW and DIA.
and DI? So my spider sense is if you have a simple rule set that's already coded, now what we want to do is look for what we would call nearest neighbor. And that is, what are the big fat indexes that behave in a manner similar to EWW and DIA? So that means it's got to be a broad global index. It has to have sort of a regional affiliation, so it's concentrated in a region, so you get the variation of a region. Like global semiconductors wouldn't qualify for that because you're getting a mix of Asia and Europe and the US. Whereas Asia less Japan, EPP, that would qualify. It's liquid. It's regionally focused. It's more volatile than the S&P. EPP would be a good one to check. I would probably run it on all 10 of the ETF2 global indexes. So if you take a look at the weekend report, you'll see that. I might also add MDY, US mid caps. Um, for me, that's always kind of been a bit of a stealthy. Um, but it turns out that that thing has, over long periods of time, has the best reward to risk profile of any of the US indexes. It's not as volatile as the Russell, but it has more expectancy than the S&P and DIA, because I think what it represents is companies that are large enough that there's plenty of owners and large enough money that it doesn't get pushed around by some tactical trading. Sometimes smaller cap indexes or smaller cap companies, a handful of focused traders can dominate the pricing action, so it gets pushed around. But the mid caps as companies are less prone to that. And the broad US mid caps represent companies in all of the sectors of the S&P, the business sectors. So you get diversification. It's a US centric. And the companies are small enough that when there's a significant buying effort, it can really move the price quite a bit. Whereas it's hard to move Nvidia and Tesla around a lot. It takes a lot of money to do that. So MDY turns out to be a pretty interesting US index for that reason. So I might try, since you can probably run those tests pretty quick, I'd run it against all of the indexes in the ETF2, the top 10 globals, plus I would add MDY. Um, I think I might also try the semiconductors, SMH, and I would also try the biotech ETF. Because if you look on the weekend report that looks at the top 30 ETFs by volume, average daily dollar volume, and volatility, it turns out that the biotech, the gold miners, and regional banks, KRE, those three are like constantly the best ones to trade because they combine large daily volume and reliable large volatility. So I think I would look at those three and the 10 or 11 other indexes in the ETF2 report. And then you'll find out pretty quickly if any of those have the same behavioral characteristics as DIA and EWW.
So if it works on any of those, I should just trade them.
Yes, I would instantly.
And if it works only if a given target only works for a certain system,
Then I'd trade that.
okay.
Here's my general rule. If I have a system and it works for a target, I trade the target with that system.
Okay.
Yeah, but it's like, so you go into the doc and it says, "Hey, it hurts when I do that." He says, "Don't do that." Okay. So I have a system, it works for a target, and then off we go. I mean, was working with a guy from Colombia who was a grain trader, and he had a system that only worked on corn. And he was independently wealthy from trading that system on corn. That's what he did. He was a corn trader. I've gone through periods where, like for 2 years, I was a silver trader. Silver. It just worked. And then they changed the margin requirements on the contract, and it kind of destroyed silver as a exciting place to speculate. So if you have a tested system, a simple, well-tested system, and it works on a target, let the performance tell you when it's time to stop trading it.
Okay.
But I would trade it.
Well, I should have quite a few trades by Monday then.
That sounds like a plan. And then if it turns out that, it works on half a dozen of them, now you can lower the dollars at risk per trade, take more trades, and then get the expectancy. And you get less impact from abnormal trades.
Yeah.
All right, what else we got?
That's it for me.
I have a question on that subject.
Yeah.
So the reason I couldn't find good targets to trade on my system was kind of that situation that my confusion between the swing and the hybrid, that I was trying to trade very volatile stocks with a 30-minute time frame. So
Yeah.
like EWW was almost impossible to make money on this with a 30-minute system. And the more I tried, the worse it got. And then I started trading less volatile stocks, and the performance started to it even makes money on the SPY,
Yeah.
but not in EWW, EWC, any of those. It's compromised. So
Yeah. Well, I'm a big fan of symbols like IP,
mhm.
Caterpillar, Home Depot. I mean, look at Home Depot on a daily chart. I mean, you want to talk about just relax and let the herd move. Let me just show you what that looks like.
Hmm.
I mean, sometimes it's as easy and stupid as what I'm about to show you. Let me share my screen here. Let me know when you can see that.
There.
All right. So entry 1, 2, 3 entry on a Kata 2, spine of the dragon. Check or hold.
Yep.
Entry 2, emerging dragon and PSAR cross. Entry 3, true emerging dragon, because it takes out the hump of the RL10. So I put like 50% of the position on with 1, a quarter at 2, and a quarter at 3. And all it does is just keep going up. And then the fourth one was like, well, I've got to put that on because that's 3R in hand or 4R in hand from the first entry. And now my decision is, well, where should I put my stop? 1, 2, 3, or 4? Well, why not put a quarter on each one?
Yeah. This is a daily, right?
Let's say, yeah, this is a daily.
Wow.
That's a daily bar.
Um,
And that's just like farming and agriculture right there. My my stop on this, well, where would you expect my stop to be? Because I'm going to get all out of this position if I get out of it because it's October 2nd.
Hmm.
Where would you expect my stop to be? if I told you I was going to be all out?
I the dragon at that point.
3.
Hmm.
2 bar low.
Barlow.
It's heading.
And tomorrow, if it takes out, excuse me, if tomorrow it opens in the yellow zone and then goes into the green zone, meaning it goes above the high of today, I'll move that stop to 4 and just leave it there all day.
Yeah.
Done. So, uh, if you think about my little group of 30 symbols that I was using for there's my 30 some symbols, and I watch those all day. I mean, every day I look at every chart. KR, this is that regional bank that has just been getting murdered, but it actually shows like it might want to go to. Sorry, I actually kind of like that. I love that on buying the green zone. I'll buy that one here in a heartbeat.
No, this is still the previous one.
What's that?
This is
Yeah,
still
this is KRE. I'll buy it at that red line. I should probably try to change it to green. I'll buy it at the green line. I hope it opens in the yellow zone, and then I'll buy the green line going north. Why would I do that?
but this is the previous one. This is Home Depot, I think.
No, this is KRE.
Oh, we're seeing Home Depot.
That's what I'm seeing.
Hmm.
And then if it does, that's what I'm seeing right there. That's where my stop would be. I'll buy the green line
Hmm.
because it's below the 3-day VWAP, the 5-day VWAP, the 10-day VWAP, and the 30-day VWAP. But it's got rising lows in the RL10s. And today it held the sell-off day's low. There was an effort to buy it. It opened where it closed yesterday. It did not make a new low. It got halfway back up the stack and then fell back to the low. So that was the first day of buying pressure, and they were not prepared enough to hold it overnight, but it didn't fail.
Hmm.
So I'm in the bottom 10% of the 10-day range. Look at the 10-day range here, is the blue box.
Right there on the line.
Right?
Support.
I'm at my price is right here. I'm in the bottom 5% of the 10-day range, and it had a 2-day held the bottom. So it's oversold on a 10-day, but on a 30-day, it's still in the bottom third, but on a 150-day, it's in the upper third. And it's got rising lows. And it's had 3 strong runs all the way up to 59. So 59 is the 10-day high. That's not a crazy target.
Yeah.
The last 2 times that it was rising and got to the green line, it went on from 55 and a half to 59. That's a 10% move.
Hmm.
So I'm risking about $1 to make $5. That's a 5-to-1 reward to risk. And if it gets above 57, I'll add a second position. Done in one. The rising uh, anchored VWAP 150 is this purple line. That's rising, so there's been a slow accumulation. But you can see there has been periodic buying pressure that is stronger than the selling pressure. You get this thunder run of buying pressure and then it corrects. A thunder run of buying pressure corrects. Thunder run. Each time that thunder run takes it up to 59. Each time the buyers come in sooner than the last time. So this is like 3 steps forward, 2 steps back. Well, it's just come 2 steps back. And right now, it's holding support at 54, 59. So if it opens in the yellow zone and goes through the green line, the path of least resistance is up. So I am essentially using a daily 10 bar frame, a 10-day risk box to sort that out. Now, if I just drop down to 30-minute and look at the 5-day, this had early buying pressure that took it up to the green line but could not break through. And then it was a slow decay. That's not panic selling. That's just the absence of buying pressure. And that's just a slow grind down to the low. So could I do this? I hope it opens inside the red box. And I'll trade it in either direction when it breaks out of the red box. That is a compound critical state ready to happen. And that's about a 20-cent risk box. Guess what 20 cents is? The R10.
Oh, yeah, $5.
So that thing can move $2 in a day. It could go from 54.60 to 56. It could go all the way up to the blue line of the 10-day anchored VWAP. That's not even surprising if it were to do that. Now that's the limit of that's a range stat move, but that's within range. And look what it did 2 days ago. It made that move from 56 and a quarter all the way down to 54.50. That's a range stat move on the downside in 60 minutes. No overnight risk.
Yeah.
So if I have this risk box from the open and I had just bracketed it, holy cow, I had a range stat move in an hour. So the fact that this thing has been suffering neglect. Now, could you widen that box and just go up to the PSAR and say, let me put the box like that? Yeah. That's about a 25 or 30-cent box. That's fine. That's like a R5. That's what a compound critical state looks like. So I should actually be ready if I'm trading this intraday to trade this. And then this should be a yellow zone. There's my setup for tomorrow for KRE. If that goes through that lowest red line, where's the next nearest support? Can't even see it.
Yeah.
51.
Until I look at the 30-day low. How many yellow boxes are in this move all the way down to here? Quite a few,
50.
3 or 4 to 1.
Yeah.
So I can see the upside move, but I can also see the failure move. KRE, it's one of the top 10 liquid ETFs, and it has extremely high reliable volatility. KRE.
Yeah, I wouldn't be surprised this one works for me too. It's
Now,
pretty
if you take a
early.
look at George's CD number 2, how many times in the last 10 days is the blue box? Right. How many times in the last 10 days has there been a CD2 intraday? Plenty. So that's why I say KRE is a nice one to trade. So take a look at it's like the last page on the weekend report. It's like the 30-day average daily dollar volume, the liquidity report. That'll show you the top 30 ETFs that have the highest average daily dollar volume from the last 30 days. And it will show you their relative ATR percentage. So the ones that are on that list and have the highest average volatility, the percentage of their price that's in volatility, those are the best intraday traders for this kind of relaxed 30-minute move. The other place that you can find reasonable targets to do that is in the daily report, where we're looking at, let's see. The frog summary. There's your.
So still, they can have a FQN of 3. It just need to be orderly, not jumping too much.
Well, that's one way to look at it. But one of the things you care about, one of the things you got to understand is how that frog quality number is computed. Like Intel only has a 1.9% frog quality number, but it has such a very large average range percentage, 4.22, that when you multiply those two together, 1.9 times 4.22, you get a trading value ratio of 8. That's why it's in the 4th position. All right. Now, the reason it has a 1.9 is because Intel had been very, very quiet for most of the last 30 days, but only recently has suddenly blossomed into over 4% average daily range percentage. Whereas marijuana in the first position also has a 4.23% average daily range, but his frog quality number is 3. That means it has been reliably 4% or greater intraday for most of the last 30 days. NVIDIA is in between because it has 4.33, which is the highest intraday average volatility, but he only has a frog quality number of 2.4. So Intel is a recently new phenomenon on the top 10 list right there. But EWW, you'll notice, has a 2% average daily range, but it has a frog quality number of 3.4. That means it's always moving 2%, which is like 60 or 70 cents. Right? So I like looking at the top 10s just as things that are reliably moving a lot or are just recently moving an awful lot. So I actually am drawn to Intel because I know that the frog quality number is low because it only has recently been trading 4% of its average price. That means there's something special going on with Intel. And it turns out that what it is rumors of a buyout option from, I think it's Qualcomm, who may be making a play to just buy Intel to strengthen their semiconductor position in the sector. So it has run up a lot, and it has also come down a lot. So if I'm interested in Intel for that reason, I can now look at Intel over to, let's call it just the last, let me go back to dailies. That, this in the last 150 days, he's gone from 47 to 18, and only recently has gone from 18 to 25, which is a 40% move, and now has pulled back to 22. And it's got a pretty narrow, take a look at that little structure. That yellow zone is a compound critical state. It's now ready to go in either direction. It's had a horrible long term. You can see that the bottom of that pink box is the 150-day low. That only happened 15 days ago. 15 days ago, it was at its 150-day low. But it's moved plus 40% in the last 10 days. But in the last 5 days has moved from 2450 to 2250. That's a 10% retracement. And today it's near the 2-day low, right near that and the 2-day low is also the 5-day low right here. So you can bet that I'm ready to go short if it breaks that red line.
Yeah.
Instantly.
Yeah.
And then where would be my target?
The 10-day low. It's 21. Yeah.
So if I put a little wrist box on it like that, there's my compound critical state. That's how hard or how easy your trade framing needs to be for this hybrid swing. So I'll just put a little alert here. Now, if it gaps open outside of that red box, that means the move is on, and I will bracket it with an R5 and trade it on 3-minute bars. Or just use visual box trading and just go. But my upside is going to be up here. And my downside target is going to be right there. So there's my Intel trade. And all that did was by taking a look at that daily report and seeing that his frog quality number was absurdly low, and yet his daily range, look at how the size of the daily bars as a percentage has changed in the last 30 days. Way back here in, September and August, it was relatively small ranges. And now suddenly, starting in the beginning of September, that thing has become a trading paradise. There was a bunch of good news that took it from 18 to 24. They had some new strategic plans and then suddenly some of those plans fell through, and now maybe Qualcomm's going to buy them because they're so cheap. So the thing's in play. All I need to know is that it's in play. So I'm going to take a picture of that since I just did all the work.
Yeah, I lost power in the middle. So I got to see we still get to see the whole image, but I did follow on a chart seeing the whole Intel explanation. That was awesome. But I lost power right at the end.
Yeah. Let me see here. I'm trying to draw a snapshot of that so I can talk about it later. That's just that's a perfect trade frame for me right there to go into tomorrow. All right, that's everything I got for tonight, guys. We've got about 2 minutes before we start the next one up.
All right.
You got some work to do. You guys are in good shape.
Thank you.
Take good care.
Bye.
Bye.